Good morning, ladies and gentlemen. This is Clueless 8. This is the pre-market AM report for Monday, last day of February, the leap year, February 29th, 2016. Today we're going to take a good look at the algorithmic high-frequency trading charts, what I call the Algo HFT charts offered by Bar Charts and on the Quad platform that some of the members are currently using. These are very tactical, mathematically driven precision charts that requires a learning curve for sure. However, the trend lines, the channels, and all sorts of different indicators that I put on it, and I don't like jumbling up with way too much stuff so that people don't get confused. I try to keep it as simple as possible. Will give us an idea of what the range trading or the trading range is for the markets. Let me get straight into it and walk people through it. What you see here are these waves, which are the Bollinger Bands. You can see that upper end of the Bollinger is 197.37. What we're looking at is the spiders, the S&P 500 spiders, the SPY ETF. Upper end of the Bollinger is 197.34. Lower end of the Bollinger is 193.44. The simplest way of looking at it is that if you break below the 193.44, the probability, and again, trading and investing is a game of probability, not a game of certainties. So if we break 193.44 or somewhere around here, this level here, then you could expect the market to trend, to pull back towards the lower end of this uptrend channel. That's around 192.56. If we break that, if we break this level here, let's say between 192.670 and 192.40, give or, there's always some, there's always some room, plus minus. Then at that point, this pattern, which is right now showing trending up, gets broken. And at that point, the probability of coming down and testing the lower levels, which can easily be identified by looking at a retest of the downtrend line breakout right here, is 189.62, and then of course the pivotal reversal candle right here on the 24th, which was last week, 24th of February at 10 a.m. when it looked like the market was just completely collapsed, but then turned around, and you can see that, you can see that huge bounce here, massive rally that we participated in successfully. So that line here at 199.34, which somewhat coincides with the retest of the downtrend line, this one comes into play. So there's nothing exact about trading or charts, but you certainly get a much better overview or a roadmap of what you're doing, and that helps us manage our trades that we're doing on the front side. That's the key to technical charting. That's the key to Clueless 8 trading technical charts, the way I set them up, because anyone can look at a chart, but their own cognitive bias, in other words, whether they're feeling gloomy or whether they're feeling happy and all kinds of stuff, bulls and bears, obviously skew what we're looking at. So at this point, this is the simplest way to look at it, and this is what you have to go with as we start this Monday and as we embark on entering March tomorrow. You have the lower Bollinger. You have a nice consolidation channel that I clearly showed on Friday repeatedly. We hit the bottom end of the channel, we slipped a little bit, and then we moved up. This is what we're seeing here in the pre-market. In the pre-market, and let me validate that, 1 second. We are seeing futures up now 4.5 points after being down 19 points at around 4 a.m. Eastern Standard Time. China's reserve ratio cut, in other words, the requirement for banks to hold capital, cash, was cut by 0.5 percentage points. They have done that 5 times since February of 2015. And obviously that liquefies the market. In other words, pushes liquidity into the global markets and takes away some of the concerns, allay some of the concerns of a liquidity squeeze or a sharp rise in credit CDSs or credit default swaps. So China basically took action early this morning, I believe at around 5 or 6 a.m. Eastern Standard Time. On that note, the futures turned around. We were down 19. Now we are down. Now we're up about 4. So that gives us roughly about a 23-point move, 22, 23-point reversal that can be looked on by looking at these candles. People who are starting to use the quad HFT charts know very well that it takes visual coordination. However, once your eyes get trained onto it, you tend to manage your trades better. Not to say we don't get hit sideswiped with quick, large sell-offs, intraday sell-offs that we see here. For example, this red candle that was good for roughly a 100-point drop on the Dow. This one right here. And what I try to do every single day is post on a regular basis the algo HFT charts, both on stocks and the indices, in order to benefit my traders and clueless say traders and investors, so that they can manage their that they can improve their trade management better. Okay, simple as that. So this is what we're looking at: lower Bollinger, nice consolidation channel, which we have seen. These are wide ones here. You can see that I draw them. It's pretty easy to see. As you can clearly see, just by looking at a quick glance at this chart, the uptrend is still intact. Somebody says how far we can go higher. We don't know exactly, but we can surmise, looking at it from a technical basis, that this reversal candle that we saw on the 26th, which was Friday, that was early in the morning, and then we opened up and we basically slid down all day long. We still did well on Friday. That consolidation channel now is breaking higher. Now we have different level of resistances, and one of the things that I can do here, which I've shown in many other charts, is put the pivot lines, pivot points. There you go. Not sure where they're showing up, but anyway, not sure why they're not showing up here right now, but anyway. So you can see here that first level of major resistance is going to be the 196.79 and then the upper Bollinger. If we break out over that, then this uptrend line that I've drawn from way back comes into play, and you can basically extrapolate that out. Let's see if I can manage this out. There you go. There you go. And that comes into play. And that's around the 198 level. In other words, 1970 to 1980 is a upside possibility. There is an upper channel here, which is obviously quite powerful on the bullish side. I don't know if we get there. But again, as a technical chartist, I listen to the message of the markets instead of always putting my views out there. And that's helped me tremendously. The upper end of the channel is, bear with me here, is somewhere around 200 on the SPYs. That's roughly about 2,000 on the S&P, right? Give or take. So it's pretty clear here. When I put the static chart up there, you can basically take a screenshot and leave it, and you can see what happens as I update these during the day. Anything can happen. All of a sudden, you get a sell candle 50 points down. But what I'm really looking at is the pattern. The Bollingers are sweeping up. And if the Bollinger waves keep on moving higher, we got an upper end, like I said, 199 or so. We know what the lower end is, around 192.54. If we drop from here all the way down here, that's a good 200 points or so, or 150 to 200 points on the Dow, right there. If we break that, all bets are off. At that point, this upside channel that we're seeing in the form of lines in the form of the waves, the Bollinger curves, the Bollinger Bands, gets broken. Now, the other thing to keep in mind, which is very important, and I've stressed this and I've taught this in the advanced coaching sessions repeatedly, is looking at the basic stochastics. This is the fast stochastics here, and we can see that it's starting to get overbought on the 1 hour basis. Okay, right there. However, it's still moving higher, and we get overbought somewhere around 99 to 100 right there. It's just like the RSI. The basic, it's basically derivative of the RSI, the stochastics. Now, if I put the slow stochastics, which gives us a more of a swing picture in the game, you can see here clearly, and this is good for the bulls. If you want to look at the long side, that even on the hourly chart, the slow stochastics are just turning around. So what it's really telling you, reading the tea leaves, is that the upside is intact, money's flowing into the market, and we are not seeing any imminent danger of a massive collapse. Now, when we get up towards these levels here, we can either stay higher, like we did here for quite a few days back in mid-February, right? You can see that kept on trending higher, and the stows stayed above the 80 level. Then that's kind of, you start getting wary about really pushing longs at that level. However, looking at this here, I would be comfortable holding selective long positions as we go through the week. Now we're going to watch this carefully because we get overbought. We're going to swing down. It doesn't always have to be all the way down here, but a quick reset, as I like to call it, can be all the way down here. You see that? And I tend to take profits once we get into this 99, 100 level, because markets are overbought and profit takers come in. So slow stochastics, which is, repeat, more of the swing trade, which can last anywhere from days to a week or so. And nowadays, the machines being so fast, they're not weeks and weeks. Whichever the case, the swing trade is signifying that we have more room to move. Once you get overbought on the slow stochastics, like we did here, every single time, you can see what happened. The market pulled back. So what I'm getting at, looking at this picture here, that by the time this gets up here, we should be up towards the 198, 199 on the SPYs, roughly about 1980 or 1990 on the S&P 500. We're seeing some nice greens on the screen. We're seeing Tesla up 2.5. We're long that. Amazon's moving up a bit. We are seeing a nice. We were seeing a nice bid on CMG, got upgraded to 590 today. So there are pockets of selective strength. So that's it. This is the Algo HFT chart. It's not rocket science. Red line signify obviously supports. At this point, another red line that I can draw for, which I explained right now, is right here. I didn't change the color yet. There you go. Okay, that's the line on the sand, 192.64. It coincides with the uptrend line here. This one, the lower channel. Break that, then this comes into play. So again, I'm watching these candles very carefully on all your behalf and for my trade management and yours. And we go from here. Anyway, have a great start to the week. It's going to be choppy. There's no question about it. And we expect, we expect volatility, and that's it. Have a great week. Thank you for listening. Had a lot of family obligations and stuff. Couldn't do an expansive end of the day report, but the amount of content that I throw out there, if you even follow, let's say 60 or 70% of them, you get a clear picture of what's going on. And after that, we got to handle with everything that Mr. Market, throws at us. Thank you for listening. This is Clueless 8 Trading.